Folks, how is it going today? All right, so today we are looking at a high income ETF shortlist. Some of my favorite ETFs in this tier list shortlist. The majority of them will be my favorites, and then there will be some that are like super high yield and super high performing, just to give you guys a sense of what those look like. But the majority will be some of my top favorites. And again, not financial advice, but my top favorite high income ETFs, and then put them in this tier list. And then we'll do a little simulation, right? If you have 100K to invest, 200K, what type of yields on average would you get from these assets? All right, so let's just jump right into it. All right, guys. So as per usual, this Google Sheets that we will share today will be available via the Patreon. If you want to sign up, it's $5 a month to get access to all the calculators, or $15 a month should you want to do a quick coaching session. I'm not a financial advisor, but we'd be discussing just finance, discussing strategies, talking and chatting about personal finance. All right, let's just jump right into it, guys. So here is my income ETF tier list and repository. And this is going to be a short list, guys, a short list of some of my favorites on here and some of the ones that, I think have done decent in terms of NAV growth and good yields, guys. Now, some of them are just to give you a proxy for like what the best performers have done. These aren't my favorite, but the majority will be more my favorite. All right. So the first thing you can do, guys, is fill out your amount to invest, right? So I have here 500K. If you want to put here 250K, if you want to put here 150K, if you want to put here $2, it doesn't matter, right? It's your call. I'm going to put 500K. Okay. And then it's going to spit out returns for each of the assets, guys. All right. So you can also sort by all these different factors, right? You can sort by payout frequency of weekly. You could sort by the highest yields, right? You can sort by the highest yielding products. You can sort by price return, which one has done the most in terms of price return, price appreciation. And you can look at average return. This is going to be a yearly average return. Now, some of these don't have more than a year's worth of return. So keep that in mind. That may weigh into your decision making, but some of them do have more than a year's return, and you can tell which ones have more than a year's return based on their age. So for some of these, I put in, or for all of these rather, I put in the inception period, and this is going to be how when they were created, and then this is going to be the return, right? So this is the average return multiplied by the amount to invest. So looking at any given year, their average return for this product would have been this, right? Okay. And then looking at the assets under management here, and then I'm giving a grade. All right. I'm giving a tier grade, and it's going to be A, B, C, or D, or F. All right. So A tier, these are the superior ones, my absolute, top tier. B is the average or above average. C is the below average. D is poor. F is failing. And then the factors I've considered are yield, tax advantages, NAV stability or NAV growth, and expense ratio, and also, and of course, total return. All right, so let's sort by average return. Let's sort by the ones that have the best average return. We've set up the amount to invest of 500K, and you'll see some of the ones here at the top. These will not be my favorite, guys, but these are ones that I want to show, is to show you, like, if you take a big risk, you can yield a great result. But not financial advice, but be careful with these. Some of these have leverage baked into them, through option, through levered calls, or whatever the case may be. These are obviously they've performed well. This Nvidia, a covered call from YieldMax, the Who W, from Round Hill, which isn't necessarily a covered call structure, but is a levered play that unlocks 1.2x value in Robinhood and pays out weekly. And Nvidia's Rex, growth and covered call income ETF, and this one also is a levered play. Now you can see with these, the average return is between 66% and 43%. If you invested 500K this year or last year into one of these, you would have seen a return of 334K, or 350K, or 250K. Now, would I put 500K one of these? I personally would not. we can change this number to whatever you want. I'm just throwing 500K there as an example, but ultimately you have to make the decision. Now with these, look at what's happening, right? Like, we have very, very high yields, but you can see like negative price return on yield maxes and VDY. While they do have a very high yield, WHO W and NVII still have a positive price return, which is good to see. But the track record for Round Hill is a heavy NAV decay based on the weekly payouts, while giving you this distribution, a high distribution. Next up, from one of the best average returns, BESH, right? This is a Bitcoin and Ethereum market weighted ETF. This one, um, it's rid the wave of Bitcoin and Ethereum, and pays out also an income from this. It's done very well since 2023, right? If you invested in crypto and Bitcoin, Ethereum in 2023, you would have done very, very good. And certainly right now we have a bit of a pullback. I'm considering this a B, right? And then the rest are going to be in like the 20% to 18% average return ranges. And this is like GPIC, TDVI, GPICs, QDVO, TYLG is one that is interesting, one to look at. KQQQ, um, Rex's AIPI is one that has done well from a total return standpoint, but I don't like the fact that it has a negative 20% or 19% price return. iDevo, which is an interesting international fund, one of the best I've seen, one of the tried and true classics. QQQI has done a 20% average return. SPY H also doing really well. IQQQ, I know BTCI, some folks might be disappointed with it recently as a result of Bitcoin, but it's still done well over its lifespan, and I expect it to bounce back. iGold, if you're interested in gold. Um, what do we have here? Maggie, which is an interesting one, from Round Hill, maybe one of the only ones I'm interested in. Blocks from Nicholas Crypto. T Spy is on here. We have also TDAC in here. Eggy. The list goes on. The list goes on. It's not too big of a list, right? I put some in here as cautionary tales, like a ULTY I put in here as a cautionary tale. This was once a shining star, and now its average return is a negative 4%. You would have lost 18K with your investment here. And even like one that was recently, people really excited about it, WPay, is has a negative NAV growth, and really the total return, and it's pretty new, but 4% total return on that. Not sure how much you'd like that. One that I'm really, really interested in is TDAC, with a positive NAV growth and a potential yield of 17% annually. Still remains to be seen. But then we can also sort this by tier, right? And you can see my A tiers, right? They're different than the total return. My A tiers are GPIC, TDVI, GPICs, QDVO, QQQI, SPY H, T SPY, SPY I, QQQH. Okay. And honestly, I might even put TDAC up in there. I might even put TDAC in my A tier. Let's put TDAC in my A tier. And you see what's going on with my A tiers. All right. These A tiers, they all have NAV growth, NAV growth or stability. And they all have, I would say, where is it? Reasonable yields. The highest one being TDAC, but every one of them is not like a 30% yielder. Yes, I like the BTCIs, and that's still in my B tier, but all of these are within 10 to 14%, highest being 17% yields. I am not yield chasing. I'm going for reasonable, conservative yields that are more predictable over time. And even these are super high. I think a 10% yield with covered calls is high. I think they're selling off a lot of appreciation to make up the difference when they don't yield the premiums. So, and their strategies aren't perfect, I'm sure. And so I want responsible yields with NAV growth, guys. And that's why I think like GPIC to me, look at that 36% price return, average return 28%, yield 10%. Phenomenal, right? Obviously, short sample size. They only came out in 2023, but it's the combination, guys, that I love. The combination of NAV growth plus the great yield that will protect you over time, guys. Don't yield chase, not financial advice, but don't yield chase, guys. Don't go for these. I'm not going for these 70 percenters, 80 percenters, even 30 percenters in terms of yield. Those are dangerous. All right, these ones, if you're a long-term investor, um, these are the ones that I think are more conservative and more focused on long-term sustainability. So, guys, jump into this tier list. I will have it in the description below for you to grab. Let me know what you think. There's a bunch of names in here, guys, and really, you don't have like I don't invest in all of these, but I'm putting these here for your review. That you can see them, you can see what's going on, see the lay of the land, and here we have all types of industries here. We have the equities market, we have the energy market, we have gold, we have crypto, we have some tech focused ETFs that are more oriented to just purely tech. We have AI, we have real estate, we have treasuries, we have conservative blue chip with OMA. We have all types of different constructs for how you want to lay out your income strategy. And you don't even have to do covered calls. There's other income based ETFs or income based assets to leverage beyond covered calls. I think covered calls should be a component of your strategy potentially, but not everything. I think you should have a treasury, not covered call strategy, but just treasury asset. You should have not financial advice, but what I would do is a blue chip dividend ETFs, dividend king ETFs, treasuries, covered calls, growth ETFs. You want to diversify the basket, not just do covered calls. But anyways, guys, let me know what you think. Subscribe to the channel. All the best and cheers.